Hello friends, welcome to another video on GST. This is with regard to the composition levy. The Government of India provides for simplified and ease of doing scheme for payment of taxes and filing of returns to certain category of taxable persons. Now as a result, such taxable person is not required to maintain elaborate records and filing detailed returns. Now, Section 10 of the Act of the CGST Act provides for composition levy to such persons. Here, today we are discussing a problem with regard to how a normal scheme and a composition scheme works. Now, let's understand this with an example. Here, the question is Seaview Hotels Limited is a registered person under GST. Its previous year turnover was 100 lakhs. Applicable rate of GST is 18%. Input cost for the hotel is 7,80,000. Its profit margin is 40% on cost. Now, the question asked here is, what is the invoice price and advise the best option to pay taxes to Seaview Hotels Private Limited, if any. So, we have to calculate here the taxes and the invoice price under both composition scheme and normal scheme. Now, here they have given that there is no opening balance and closing balance for the tax period. Now, let's find out how to find out the invoice price and tax thereon under both the options. Now, let's first understand how composition scheme calculation works. Here, now, if we have seen the question properly, the question says the cost of inputs to the hotel is 7,80,000. Since this is a composition levy, as you know, one of the conditions in the composition scheme is that no input tax credit is eligible on taxes paid on purchase of inputs, and this shall be a cost to the company. Hence, this cost of GST paid on inputs is added to the cost of inputs, making the total cost to be 9,20,400. Now, the question says that there is a profit margin of 40% on the total cost. Now, 3,68,160 is a profit margin of 40% calculated on 9,20,400. Hence, the invoice price would be 12,88,560. Now, if we calculate taxes on this, assuming it to be an again intrastate transaction where CGST and SGST are levied on the taxes, since this is a composition scheme and this is a restaurant business, the rate of tax is 5%, 2.5% each of CGST and SGST. So the tax amount comes to be 32,214 each for CGST and SGST. And hence the total GST liability is 64,428. Now this is with regard to composition levy. Now let's understand this. If it is a normal scheme, then how will the hotel find out its value? Now here the cost of input is 7,80,000 as similar to composition levy. But here one change is, since it is under normal scheme, the hotel can claim that 1,40,400 of GST paid on inputs to be set off against its output. Hence, it is not a cost to the company, and hence the total cost only here would be 7,80,000. Again, profit margin of 40% is added on the cost. That would come about 7,80,000 plus 40%, that is 3,12,000. And if we add GST on this total cost, that is total cost of 780 plus 3,12,000, that is, on that you are calculating 18% because it's a normal scheme and there is no concessional rate of tax. Hence the invoice price under both situations, if you see here, is 12,88,560. It is same here in case of both normal levy and composition levy. Only difference under normal levy is that you are eligible to pay an output tax of 98,280 of CGST and 98,280 of SGST, but you are eligible to claim the input tax on paid on inputs equivalent to 1,40,400, that is 70,200 each of CGST and SGST, and the net liability for the hotel is only 28,080 of CGST and 28,080 of SGST, which works out to be a total liability of 56,160. With this, we can make a decision that even though the invoice price under both schemes are same, but my total output tax liability is lesser under normal levy, and I would choose to go under normal levy and maintain all my records in order to save my output tax liability. Yes. Now, after having understood this, let's understand what are the condition and restrictions for going under the composition levy. Rule 5 of Chapter 2 of the CGST rules of 2017 prescribes certain condition and restrictions for opting this composition scheme. Now, what are those restrictions? The first restriction says the person opting for the scheme must neither be a casual taxable person nor a resident taxable person. The goods held in stock by him on the appointed day have not been purchased in the course of interstate trade or commerce, or imported from a place outside India. That is, it must not have been purchased from outside India, received from his branch office outside the state, or from his agent or principal outside the state. That becomes an interstate transaction, and hence composition scheme is not eligible in such cases. The next condition is the goods held in stock by him have not been purchased from an unregistered supplier, and where purchased, he pays the tax under reverse charge under section 9(4) of the CGST Act, and he is not engaged in the manufacture of goods as notified under this section during the preceding financial year. That is, as you all know, that under the composition scheme, only those who are dealing in supply of goods are eligible for opting composition scheme, except for those under restaurant business, and all other services are not eligible to be registering under composition scheme. Hence, the exceptions given here are that he shall not be engaged in the manufacture of ice cream and other edible ice, whether or not containing cocoa. He is not engaged in manufacture of goods such as pan masala, tobacco, and manufactured tobacco and its substitutes. Now, the next condition given is he shall pay taxes as per normal rates in case of inward supply of goods and services or both received under section 9. These subsections provide for payment of tax by recipient of goods or services, that is, reverse charge mechanism. Now, a composition dealer shall display mandatorily the words composition taxable person not eligible to collect tax on supplies on its invoices, and he shall also mandatorily display the words composition taxable person on every notice and signboard displayed at a prominent price. As you all know, a person who is registered under the composition scheme, he can be so registered only if his aggregate turnover in the financial year did not cross or exceed 1 crore of rupees in normal states and rupees 75 lakhs from northeastern states. Only such people are eligible to register themselves under composition scheme. Thank you.